Welcome to the Bitfolio Academy Coaching Community Newsletter. This is a twice-a-month newsletter published on the 1st and the 15th of each month. Today is May the 15th, so we're going to take a look at the May 15th newsletter. The focus this month is LUNA UST collapse, curve three-pool war. What caused the LUNA UST collapse? I believe the collapse was directly related or directly linked to the curve three-pool war. And I think it boils down to arrogance and a lack of humility. I wrote a full blog article about this, but I thought I would summarize it here in the newsletter. First, Do Kwon was behind an earlier failed stablecoin called Basis Cash. Do Kwon knew the fragility of algorithmic stablecoins, so earlier this year he proposed to back UST with the Luna Foundation Guard, composed of $10 billion in BTC reserves, Bitcoin reserves. This was a good idea, but it never had time to mature. Do Kwon announced a Curve 4 pool with Frax and UST. Now this was a frontal assault against Curve 3 pool and against the DAI stablecoin. On March 23, 2022, Do Kwon tweeted, "By my hand, DAI will die." The goal of the 4 pool was to ensure deep liquidity for the newly allied algorithmic stablecoins of UST and Frax and starve DAI of liquidity. On May the 8th, 2022, in anticipation of the 4 pool launch on Curve, the Luna Foundation Guard removed $150 million of UST from the UST plus 3 pool. This is a factory liquidity pool which pairs 3 pool and the UST token. On the same day, the attacker used around $350 million in UST to drain the Curve UST 3 pool of liquidity. Unaware of the attack, Luna Foundation Guard removed another $100 million in UST from the UST 3 pool. This starts the depegging of UST from the US dollar. On Coinbase, UST fell to 94 cents. With the Curve liquidity drained of UST, the attack continued by selling UST on Binance, and soon withdrawals from Anchor started, and there was a panic in the system. The major depeg happened on Monday, May 9th, as people fled for the exits. By Wednesday, May 11th, UST was 30 cents, and UST and Luna investors had lost confidence. Attacking DAI was a big mistake. Before UST and Frax could team up and launch an attack on DAI and the Curve 3 pool, UST was attacked in exactly the same way that they were planning to attack DAI, namely by draining the liquidity on UST 3 pool and draining the liquidity of UST on Binance. Is this karma? I don't know if it's karma, but I will close with a proverb. Pride goes before destruction and arrogance before a fall. It's better to be humble than to divide the spoils with the arrogant. In on-chain analysis, the biggest loser, of course, is Terra, with daily transactions up 344%. Another notable loser is Avalanche, with daily transactions down 35% and daily active users down by 9.6%. The biggest winner in the last 2 weeks is Tron, with daily active addresses up 105%. Also, Near was up 59% in unique addresses. Looking at the top chains in decentralized finance, we see that the biggest loser in the last 2 weeks is Terra blockchain, $0.4 billion in total value locked, which is down 98.5%. The biggest winner is Tron at 3.7% of the total value locked in DeFi, moving ahead of Polygon at 2.5%. Polygon is also a winner, though, because it's up 41% in terms of the percentage of the total value in DeFi. Moving on to bridge inflows and outflows, or net flows, we see that Terra blockchain has lost $3.2 billion on the bridges in terms of outflows. Avalanche, though, is also a big loser with $1.7 billion in outflows or net flows. It's a net outflow. And Phantom is also down $1.2 billion in the last 14 days in terms of net outflows. When we take a look at the NFT marketplaces in the last 30 days, OpenSea has $362 million in total volume. In the last 30 days, looks rare, $66.7 million for a combined total of $429 million. This is down 9.3% in the last 2 weeks since May the 1st. Coinbase NFT Marketplace is still in invite-only beta mode, with less than $1 million in sales over the past week. In terms of technical analysis, on April 7th, Bitcoin turned bearish, and BTC has remained in a bearish trend ever since April the 7th. At the present time, Bitcoin seems to be finding support at around $29,000. On May the 1st, BTC was finding support at $38,000, so the bears are in full control. The total crypto market also turned bearish about the same, a little shortly after Bitcoin did on April the 9th. The Federal Reserve 5 basis point interest rate hike in the first week of May hit crypto pretty hard, and then Terra LUNA UST self-destruct on May 9th. We saw further declines. Total has lost $400 billion since May 1st, and in the 2 weeks prior to May 1st, Total had lost $1 trillion in market cap. Total is currently finding support just above $1.2 trillion. In the news over the last 2 weeks, of course, the biggest news item is the LUNA UST meltdown. LUNA and UST were delisted on Binance, on OKX, on several exchanges on May the 12th. It's basically LUNA UST is all but dead. Lido also lost its peg. The staked ETH lost its peg against the real ETH. This happened on May the 13th. Lido stake Ether lost its peg against real Ether. Lido, of course, increased liquidity on the Curve pool, the Curve's largest pool, which is the staked Ether pool. But Lido has lost 50% of DeFi total value locked in the last week. Tron launched its USDD stablecoin on May the 7th, and it's modeled after the LUNA UST. USDD is currently paying over 20% APRs on Just Lend. USDT depegs from the US dollar briefly on May the 12th. During Asia hours, the Tether saw a depeg from the dollar. It went from $1 to 94 cents at its lowest point on FTX. Germany declares crypto gains tax-free after 1 year. The German Ministry of Finance published a letter officially confirming that the sale of crypto assets is tax-free after 1 year. So if you hold your crypto assets for more than 1 year, it's tax-free, even if the coins were used in staking and lending. Janet Yellen, the Treasury Secretary, renews her call for stablecoin regulation after the Terra USD stumble. She encourages Congress to pass legislation this year. CPI printed 8.3% in April. Core CPI inflation at 6.2, which excludes food and energy, was higher than expected. Terra turned off its blockchain twice in 24 hours, with both its native token and the stablecoin in free fall. Terra blockchain was officially halted twice. Instagram began testing NFTs. Polkadot launches cross-chain messaging system. This is similar to Cosmos IBC. It's called Polkadot XCM, and this is expected to promote Polkadot's multi-chain ecosystem. The Fed, of course, raised interest rates by 0.5% on May the 7th. The first time since 2008 have they done a 0.5% increase. The Luna Foundation Guard bought $3 trillion total in Bitcoin by May the 5th, but it did little help to restore or to keep UST from losing its peg. Wholesale prices were up. Inflation continues to be hot. The Commerce Department reported that wholesale prices jumped 11% in April, 11% up over last year at this time. China is now accepting their digital currency to pay taxes. So this is a more broadening of the use case for the digital central bank digital currency. Coinbase stock fell 26% in one day on May 11th. It fell 26%. Coinbase missed its estimates, and its shares declined by 43% in the 4 days leading up to May 11th and 26% on May 11th. Crypto.com slashed their Visa card rewards. On May the 1st, Crypto.com announced that they were slashing their Visa card rewards pretty significantly. The changes will take effect on June the 1st. Fear and Greed Index is currently at 14. Extreme fear. In the stock market, the Fear and Greed Index is 34. Fear. So that's all for the newsletter this month. I hope you enjoyed it. Thanks for watching. All the best.